In this video, we're looking at task 5 from Business Tax Sample Assessment 2. This task is about calculating chargeable gains and allowable losses in company disposal of shares. So it's very likely you're going to get a question like this in your assessment, so you need to make sure that you can do it well. In our virtual learning environment, we have a huge number of questions you can practice like this, so you just go over it again and again and again until you get it right. So let's have a look at this particular question then. So company G has the following transactions in shares of company H. So we've got 4 different transactions there. And notice that we've got some indexation factors at the bottom of the screen as well. So the idea of this for companies can use indexation for their capital gains. So rather than comparing the sales proceeds now with a cost which may be several decades old, we can inflate the cost from a long time ago, basically increase it with inflation, and that means we can compare today's proceeds with a higher indexed cost, and that allows companies to reduce its gain. Now notice at the bottom of the screen, the 2 dates go up to December 2017 because that's when indexation ceases as a benefit for companies. Notice also we've got 2 sets of data there. We've got an index number from February 12 to March 14, and then from March 14 to December 17. And then there's a combined version as well from February 12 to December 17. And if we add up those 2 numbers, if we add 0.62 and 0.91, so notice that doesn't give us the 1.59. Now, why is that? Well, because we need to remember that indexation, inflation is cumulative. So if prices go up this year and they go up next year as well, there's a combined approach. So what we need to do is multiply these factors together. So if you take 1.062 and multiply that by 1.091, that will give us 1.159. So yeah, these numbers do not add together. They are multiplied against each other, but we just need to add 1 to the beginning of them. Remember, in terms of indexation, it's always an index number of 100 at the beginning, isn't it? So it's 1.0 something. Okay, so there we are. So those are the different index numbers, because there's a choice when we apply the indexation to the transactions. We could do it line by line, or we could try to do it cumulatively. So we'd recommend that you do it line by line. Okay, let's have a look at what the answer grid looks like to help explain that. So anyway, we can see, look, there's the instruction. Complete the share pool. The purchase on the 10th of February has already been included. So we can see we've got a column for the description, a column for the number of shares, a column for the cost, and then a column for the index cost. Okay, and what we'd recommend, you just fill in every row, but before a transaction, do indexation. Okay, and then do a subtotal, and then when you have a transaction, before you do that, do indexation. Okay, we're going to show you how that works now. So we're going to do it in chronological order. So we can see, like, there's the 10th of February, purchased 900 shares at £17 each, and so that's the first transaction. And then on the 14th of March, there's a rights issue. So there's a transaction there, but what we're going to do though is indexation first. We're going to apply indexation from February 12 to March 14 using 0.062. So that's going to be our first line. So we have indexation. So it's going to be 0.062. And we're going to multiply by the index cost total that we have at the moment of 15,300. So if we take that and multiply it by 0.062, we get indexation of 949. Now the question tells us that we need to round out to the nearest pound. Okay, so we're going to round up here. So it's 948.6, and that 0.6 is more than 0.4. So yeah, we're going to round up. So we can do our subtotals now. So we've got 900 for the number of shares. Our cost subtotal is 15,300. But now we have an indexed cost subtotal of 16,249. So you just need to remember, we just keep on doing these subtotals because they're going to be important for us in terms of our calculation. And then what do we have? So on the 14th of March, we have a rights issue, 1 for 2 at £9 each. So we can put that in next. That's the 14th of March. It's 2024, isn't it? Oh no, 2014 for this one. And it's our rights issue. It's 1 for 2. So how do rights issues work? The idea is of a rights issue is that we're going to sell shares to our existing shareholders. Okay? So the existing shareholders quite like this because it means that they don't get any dilution of their ownership. So if they have 50% of the shares already, after the rights issue, they'll still have 50% of the shares, assuming that everybody takes up the rights issue. Okay, so there's no new shareholders, there's no dilution of ownership. And in this case, it's a 1 for 2 rights issue. So what we're saying, for every 2 shares you have at the moment, you can buy another 1 share. So that means we've got 900 shares, we can buy another 450 shares. And we can pay £9 each for these. And typically the issue price would be at a discount of the market prices. So that's the incentive for the shareholders to buy them. It's cheaper than buying them on the stock exchange. Okay, so that means we've got 4,050 as our cost. So let's do our subtotal again. So we've got now 1,350 shares. We have 19,350 as the cumulative cost. And we have 20,299 as our cumulative indexed cost. Right, so what happens next then? The next event on the 14th of February 2018, we dispose of 500 of those shares. So we can put that in here now. So that's the 14th of February 2018. We have our disposal. So we dispose of 500 of these shares. Now, these 500 shares, are they from the original purchase or are they from the rights issue? Well, it doesn't really matter because we're just going to take the average. Okay, so we want to work out what our cost is. So to do that, we'll take the 500 that we're selling now. We divide by 1,350 to work out what is the proportion of the shares that we're selling. So we're selling 37% of our shares. And then we multiply that by the subtotal figure, the 19,350, and that gives us a cost of 7,167. Okay, so again, let's go through that again. That's 500 divided by 1,350 multiplied by 19,350. Okay, that's the 37% of the cumulative cost. And then we just need to do that again for the index cost. So we take the 500, divide by 1,350, because we're selling 37% of our shares. And then we multiply by 2,299, and that gives us a reduction here of 8,202. So what's next then? We have a disposal on the 14th of February 2018. We disposed 500 shares at £18 each. But before we have a transaction, remember we deal with our indexation. Okay, so we need to do an indexation from the previous event from March 14 now to February 18. And look, there's our indexation factor of 0.091. Remember, that only goes up to December 17 because that's when the indexation allowance finishes. So what we need to do then is apply the 0.091 and multiply that by the 2,299. That's the subtotal we have in our index cost. So 2,299 multiplied by 0.091, and that gives us an indexation of 1847. Again, with a little bit of rounding. So that gives us some new subtotals now. So we have a subtotal in the final column of 22,146. And then for our other columns, so again, because we're not making any adjustments to these are staying the same. So again, remember the technique. We always do indexation just before a transaction, And then that's what our next thing is. On the 14th of February 2018, we have our disposal. So that's the next thing to do. 14th of February 2018, disposal. So we're disposing of 500 shares, aren't we? Okay, so what we need to do then is work out, well, what is the cost of that disposal and what is the index cost of that disposal? And we're just going to do this on a proportional basis. Because those 500 shares, are they being sold from the original 900 or are some of them from the rights issue? Well, we don't know. There's just a big pile of shares and they're all, all same pile in same pool, aren't they? So what we're going to do then, we're just going to work out what is the proportion of the cost that we're going to recognise in this disposal. So if you take the 500, that is how many we're selling now, and then we divide by 1,350, that tells us we're selling 37% of the shares. And then if we multiply that by 19,350, that gives us the proportional cost of 7,167. Okay, so that's 500 divided by 1,350 multiplied by 19,350. And then we just need to do the same for the index cost as well. So that's going to be the 500 divided by the 1350 and then multiply by 22,146. And that gives us the 37% of the indexed cost of 8,202. So now we do a subtotal, so that means we've got 850 shares left with a cost of 12,183, but after indexation, the current subtotal is 13,944. Okay, and what happens next? So we have another disposal on the 15th of October 24. But we don't need to worry about indexation this time because remember there is no indexation after December 2017. Okay, so we can put that 15th of October 24 disposal in. So how many shares are we selling this time? We're selling 300 shares at £24 each. So that's going to be minus 300. And we just need to do the same as we did last time. So 300 out of 850 is 35.29%. So we take 300 divided by 850 and multiply by 12,183, and that gives us a cost of 4,300 with a bit of rounding. And then we need to do the same for the indexed cost as well. So it's 300 divided by 850 and then multiplied by 13,944, and that gives us an index cost of 4,921. Okay, with a bit of rounding. Remember the question told us to round to the nearest pound. So that gives us our totals now. So that means we have a total of 550 shares. And what was the original cost of those? So that's a cost of 7,883. And then the carried forward index cost is 9,023. Okay, so that's our carried forward balance. Okay, so that's the movements in the pool. So I guess recap: transaction, indexation, subtotal. Transaction, indexation, subtotal. Transaction, okay, no indexation in this case because it's after 2017, but then we got our subtotal and we can work out our disposals. Okay. Now the question was asking us though to work out, so complete the share pool, show the balance of shares carried forward, and that's what we've done, isn't it? Okay. And then the next bit then, calculate the chargeable gain or allowable loss on the disposal of shares in the year ended 31st of January 2025. So we're just focusing on that final disposal of the 300 shares. Okay, so what we need then is our proceeds. So we have a sale of 300 shares and in terms of pounds, we sold them for, where was it there, £24 each. Again, so I'm trying to show all my workings here. So 300 shares times by 24. So that's our total proceeds of 7,200. And then what about our cost? So the cost of those, there we can see, look, there's our cost, 4,300. But remember, we can remove also our indexation. So we've got 4,300 is the bare cost, so there's a further 621 of indexation. Now, why am I doing this separately? Why don't I just include the full 4,921? Because remember, indexation cannot create a loss or make a loss bigger. So I want to see, to begin with, look, we've got our 7,200 minus the 4,300. There's actually a gain, isn't there? Okay, so that's okay. There is sufficient gain available for me to take off the indexation as well. So yeah, what is our gain going to be? Okay, so we got the 7,200 minus 4,300 minus 621. So we have a final gain of 2,279.